What's going on, everybody? It is Tuesday, January 7th, day log episode over NQ and the live stream review. So, going off of the weekly forecast and what we discussed, so far everything's kind of playing out to expectations. Um, we've seen a really nice closure off of today, where we closed beneath the bearish order block here, or at least the up close candle, which was yesterday. We've turned that into a bearish order block. So from this swing high to the swing low, just to reiterate, we've gone up into that premium, into optimal trade entry inside of that sell side imbalance, plus the order block, and we've expanded away from it. And now we've created another order block here. So anytime, especially on the higher time frames, a weekly chart, a daily chart, that you're creating order blocks and price is respecting the on-side order flow. So what does that mean? Well, you're looking at what price has been respecting on the daily time frame. Just imagine this is a 1 minute chart. We've been respecting this, or we did respect this premium imbalance from that dealing range high to this low. We respected that premium imbalance plus this bearish order block here, expanded out in time. We expanded away from it. We made a new low. Price retraces back up into this premium here. Price respects the sell side imbalance plus this up close candle, which is your bearish order block. We expanded lower, and now we've made another order block here. So turn down this volume. That's a really good reaction off of that. Plus the closure, that gives me confidence to possibly look for this week a run into this low down here. We'll take a look at the weekly chart as well and notice what I mentioned throughout the whole week on how I was anticipating price to possibly close beneath this buy side imbalance and dig further into this bullish order block, which I'm believing will not be respected. And I want to see deeper runs, right? So it's a really good example if you go back to the weekly forecast and even yesterday and you look at the things that I discussed when you talk about narrative and you talk about going into a day where you're trying to anticipate, well, what is it trying to run for? Why is it trying to run for something? How do I know what to take? What model do I trust? What side do I trust? Well, doing those due diligence when you're looking at intermarket relationships, when you're looking at S&P on the higher time frames, when you're looking at the order flow on a daily chart, 4 hour, etc., and you're breaking down the certain areas in which you believe price should retrace up into, or at least your last points of interest. If price is going to be bearish, this would be the last point of interest. If it respects it, we get a closure. That's a really good confirmation what we had today to expect and anticipate that we should see a run possibly into this low within the next day or two, or maybe by the end of the week. So if anything, if you're looking at price, well, you're just reading it like a book. If you want to see lower prices into that low, then you want to see price retrace back up into this order block here before expanding lower. So if we go into tomorrow and price is inside of this order block, then you should anticipate a reaction off of the open or, during that time period, during the silver bullet, a reaction off of that and see lower prices away from it. You should want to see that. Same thing with the 4 hour time frame, right? Since there isn't an order block per se in that area where the daily time frame is, you refine it and there's a different PD array there. And that PD array, excuse me, is the inefficiency, which is resting here. So if you want to see lower prices, then you would want to see this sell side imbalance traded into, respected, and see a movement away from it into this low down here, right? So this is narrative or textbook narrative to me 101 with combining intermarket relationships, with combining SMT even at the highs that we discussed in the weekly forecast with ES. I mean, this is just textbook good example of good order flow to me, really, when you look at it. And you're combining other things like this inversion fair value gap, which is from the left of you. So if you want to find out, well, where do I know price could stop within the sell side imbalance? Well, you're looking within that sell side imbalance and we have an inversion. So that area right there is a very sensitive area for price to reach up into. And if it reaches up into that, you see a nice reaction. You see a model that prints within a certain time, aka really the silver bullet, then that's a good inclination to be shorting NQ, right? And unless something changes or if price just, immediately keeps spooling higher and doesn't give you anything, then you don't take it. But that's what you'd be looking at. Same thing with the hourly chart. You're refining the hourly chart. There is, excuse me, the hourly imbalance, which is resting here. You're also going to see the inversion fair value gap to the left of you. So all of those things to me are very, very important when you look at it. If you plot the new week opening gap and the previous new week opening gaps, you can combine those sort of things as well. And if you go into lower time frames today, I think there's some really good stuff in there that we saw. And everything basically played out to expectation. I mean, nothing really surprised me. And of course, I was taking some paper trades today, and I was really, it's some people may believe this or may not, but paper trading for me, when I'm in that mindset, even with an audience, I just am really not tapped into really taking entries or things that I probably would in a normal live account. It's a different mindset for me. I was emailing my funder today. I got feedback from Tradeovate. They're still uh, waiting and uploading the documents or something. So hopefully this week, if anything, I'll be on the live account next week for sure. Which I know a lot of you are not looking for, trade ideas. You're just looking for education. So that's really my main focus. I'm really trying to steer away from that idea of trade copying and all of that. I just want to educate. Of course, you want to see somebody be able to do this in real time, but most importantly, if you can just learn to do it yourself, it doesn't matter what anybody else can really do. Today, again, when we were at the open, we were up here, I was stating how I was waiting for the news event driver, which came out at 10 o'clock. So that 10 o'clock, that's a rule for me. If there's a news event driver ahead of me, even if I am very, biased on a certain place where price should draw to, I still will sit out of it because it's protected me plenty of times, and I'm okay with it missing a move, quote unquote, because I also know that price is in an abundant state of opportunity where I can always go back in the market. I can always, look for something else as well. So if you look at before the open, we're taking out this buy side liquidity pool. Now, where is it taking that out at? Well, from this dealing range high to this low here, it's taking out internal buy side liquidity within that dealing range, which is inside of a premium. And the reason we're looking at that dealing range is because that's the last dealing range. From that high to low, we've generated sell side underneath that. And now within that dealing range, there's a premium imbalance, which is resting here. And that's what we ran up into. Observe the hourly chart as well. So there's a few things today off the open that I was looking at. The sell side here, there was an opening range gap, which I had annotated from yesterday and even during the live stream today. I said the opening range gap from yesterday should be traded to or fully closed in. And that's what we did beautifully today. We traded down into the new week opening gap and even took out the sell side liquidity here. That was really, really beautiful delivery. I anticipate tomorrow possibly a run down into this sell side liquidity pool, which is resting right here. I think that would be the overall objective for tomorrow, is looking for the sell side liquidity. So it's a really good example overall. You can even look at this as a accumulation, right? We have accumulation, manipulation above the highs here, and then distribution, which takes out the sell side liquidity underneath the lows. So it's a good example there. When you go into the 5-minute chart here, you see another example of, you see another raid basically right out the open, taking out the buy side liquidity, anybody prior to the open. You're taking out the highs here, right? All of this buy side, you're taking it out. You're also taking out the other buy side liquidity pool above here, running into that premium imbalance. If you look at here, this premium imbalance, price returns into this premium from this dealing range high down to this low. Price is returning into that premium. Look at the bodies. The bodies never close outside of this imbalance, right? We never close outside of it. And the premise and the bias of the day was not looking for longs. It was looking for overall shorts and looking for lower prices because of the higher time frame and because of the preparation that we were kind of outlining today. Looking at the 1-minute time frame, this is where you're going to get into a little bit more technical, movements and fast-paced movements. And I was really trying to show examples of today of like looking at the lower time frames, looking at a seconds chart, kind of getting people adjusted to that as well. I know some people aren't used to that, or at least watching it. So I was trying to be mindful of that. But everything basically played out to perfection. And once we took out the liquidity in here, I was annotating how in here I was looking at potential long, and I was really just trying to annotate the idea of, and I executed it decently well, on the next run. But if price is making these deep runs, either you can anticipate the idea of price possibly returning into a deep premium. Now, what I'm getting at is if I'm countering an idea, and I'm gonna have to reel it back to make sense here. From this dealing range high down to this low, the premium is resting here. Now, if price is in a very fast-paced moving environment, price will not return into that premium and it will leave certain areas as breakaway gaps, meaning that it's in a hurry to get somewhere. So, aka this inefficiency here ended up being the breakaway gap. And this is why countering an idea or countering the narrative, which the narrative is lower prices, if you're taking a trade countering that, you have to be mindful that it's a lower probability setup. It's a lower probability idea because this would work if price was, and I'll show you it did work on the other next series. There's never a point throughout my career and even ICT's concepts where I've been able to determine that. So it's up to you to choose whether or not you want to stick with the narrative or you want to take the chance on a model that it could be a retracement. Because all you're looking at, let's say this model in here, this is a breaker. You have a low, you have a high, you have a lower low, then you have a higher high. You have an inefficiency, which is right here, right above that breaker. And that's what I was executing on today. And what I'm executing is not off of that model. I'm executing off of the idea is from this dealing range, price may want to go into a premium before selling off of again because my overall idea is price wants to seek lower prices, but it may want a deeper retracement before selling off again. Now, I'm in the understanding if I do take these type of trades and these type of setups, right? This bullish breaker with the inefficiency here, if I'm willing to take this trade, I understand that it's lower probability than shorting it because it may not ever return into that premium because if it's in a hurry to get to a certain liquidity pool, a certain objective, it will not return into a premium. It will simply sell off. Is there a way, CJ, to figure out whether or not it's going to sell off or go into premium? No, I don't think that there's a way to figure that out. Through time and experience, I think that will teach you, and I've seen it myself where there's times I can see, okay, it can return to this or it can't. But it's also the game of probabilities, and that's what we do here. You see a model, you have an expectation, and either it works or it doesn't. It doesn't mean that I have to figure this out every single time, and I have to be right every single time. Sometimes you get it wrong, and it just is what it is. All Price did in here was return into this bearish order block, which is reclaimed inside of this, and Price sold off again, and we reached into basically deeper levels and reached beneath the new week opening gap. Now, I'm going to show you again here where price, I did this on the live stream, from this dealing range high down to this low. If I'm expecting price to sell off again, do I have to wait for price to return into this premium before doing anything? I don't necessarily have to, but I understand that if I'm willing to take a long, I'm taking the long on the expectation that it's a retracement within the overall bearish order flow. So it's lower, classified lower probability because it may never return into this premium. It may never do it. It may just return to this new week opening gap and then just sell off again. But CJ, how do I know? How do I know? You don't know. That's the whole point. You never know because that's a game of probabilities that we play here. You're taking a chance on a certain model and on a certain criteria. So it's up to you whether or not you say, look, I'm just going to wait for the overall sell. I'm going to wait for the overall narrative. That's what I'm comfortable with. Or you're somebody who likes a little bit more risk. You're willing to take a loss or you're willing to execute on a model that is maybe in not overall the highest probability, but it still has a chance because there is a chance that price will go into this premium before selling off again. And that's exactly what I did today. And what I was trying to annotate for all of you is, well, if price is going to sell off again, then I'm going to look for the idea that price is going to return into this premium. And where is that premium? What's resting inside of that premium? Well, this is a bearish breaker here. You have a high, a low, you have a higher high, then you have a lower low. So that becomes your last down close candle, which becomes your bearish breaker. You have an inefficiency, which is resting within it. You also have another one that's resting right here. So if price is going to sell off, then you should anticipate price to return into that premium before doing so, right? So how do you know when you should start looking for a long for the potential retracement? Well, you see breakers are very good determinations of when price is switching from order flow to order flow, meaning aka from bearish to bullish. So in here, you have a low, you have a high, you have a lower low. Then we create what? We create a higher high. Right there on that closure, it closes above this high there. So this last up close candle, the highest up close candle becomes a bullish breaker. And that's showing you, or at least to me, that price is switching from bearish to bullish now. And I'm understanding that all this is just a retracement into this premium here. And these are all things that, it's sometimes very difficult, and I'm going to try to do my best to actually reel back on this during live streams. And I think this is why day logs are very good for me, because I'm able to fully go in depth. Sometimes I'm trying to explain all of this during the live stream, and price is moving, and people are commenting, and there's a lot of chaos going on. I see all this in real time, and it's hard to almost express it and really try to annotate it with my words. So I may save a lot of this. I may just, be a lot more chill during live streams and kind of just explain all this during the daily log. So those who watch it, you're going to get the real gems. You're actually going to be the one who learns. So another, indication of that is when you would be looking to take a long, is if you see a sell side imbalance or an opposing PD array, which is this imbalance, you have the breaker formed. If it closes above that imbalance, that's showing it's no longer respecting it. So now, if it's going to sell off, it should at least want to go up inside of this premium. Now you plot the new wick opening gap, which is resting right here. Now, if you go into a seconds chart, which is a 15-second chart, you're not going to be able to see it on a minute chart because there wasn't much. Right there, and I'm going to take this away. Right there's a really good little model right there, right? Because you're working off the framework I just stated, right? This little inefficiency that's here, you're showing that price is closed above this breaker. You're also closing above free or opposing imbalances, which this is a sell side imbalance. What do? We closed above it, so it's no longer respecting it. What does it become? Inverted, right? This becomes inverted. Same with this one here. This becomes inverted right there. So it utilizes this inefficiency, IOFEDs it, institutional order flow, utilizes the inversion, price spools off higher into the CE of the new week opening gap. If it's truly trying to seek that imbalance up there, that premium, then it should want to kind of speed through the new week opening gap, right? And that's what we got. So you see the speed through it. You see this another imbalance form with the new week opening gap, right? So you have the new week opening gap, which should be a launch pad plus an inefficiency. It should be a launch pad to get up into that premium, right? And that's what happened. As soon as you got outside of that premium, that's where your long should be trailed or stopped, basically taking partials. You should be done. Because again, you're in the understanding that this thing's overall bearish. It's going to sell off again. So all I'm doing is longing it into that premium. And once it reaches that premium, and particularly not just, not just magical fib levels, you're looking at where is it actually retracing into to sell off again? Well, where it's looking to seek is this bearish breaker and this inefficiency. And guess what we did in the afternoon? Guess how we sold off? This inefficiency plus that breaker, right? So this inefficiency, extend that out in time. There's also a previous new week opening gap, which is resting there. But if you take that away, not to make it cluttered, there's your bearish breaker. And it's actually, if you want to get technical, it's all of these down close candles. But I know there's some newer people, but it's all of these down close candles because that's your series. You have your high, your low, your higher high, then your lower low. Mean threshold of all of those right there. Where does it hit? Mean threshold inside of the premium within the inefficiency. And then price starts to break down in here. You see this inefficiency, which is resting right here. And what time is all this happening? Look at your macros, look at your time. 11:50, when does this start to spool off? When does this start to move? 11:50 to 10:10 is when this starts to move, right? So you have your inefficiency, you have your order block here, respects it, and this is your homework to start annotating all of this. I'm just going to give you the inversion. I see another inefficiency that's here. And where should it be seeking? If we're overall bearish, where am I targeting? Where is my roadmap? Well, my roadmap should be looking at the dealing range low, which is down here, right? So if you look at price and what it ended up doing, we spooled off beautifully into it. So hopefully it's a good explanation. Hopefully I don't want to make these super drawn out, but these things take time to explain. It's not something that just comes easy. You can't just explain this in a 5 minute training. I mean, this takes in-depth explanation to explain it fully. And I could sit here for hours on end, to be honest with you, and go over each little tick and explanation behind it. But hopefully that makes sense. Hopefully you gained a little insight from that. So I appreciate the ones that do watch these videos. They get much less views than the live streams, which blows my mind. And I've already seen this from last year, but this is where the real learning's done. I mean, if these got as many views as the live streams, I would only do these, to be honest with you, because I think the live streams are, sometimes they're not as helpful. I think going over these things in depth can be very, very helpful. So hopefully you guys enjoyed today. I'll talk to you guys tomorrow with the live stream. Until then, peace out.